What is the stock market? Why do we need a market for stocks? If you think about what the market is, or a market is in the traditional sense, it's simply a place that people go to exchange goods and services. And within each market, there are both buyers and sellers. The stock market or stock exchange works the same way. It's a place where buyers and sellers go to conduct business. And the business is the buying and selling of shares of stock. Last time we talked about how private companies, when they want to raise money, can sell off ownership of their company to the public. They do that by dividing their company into different units called shares, and they sell each one off for a given dollar amount. Now, after that has happened, the public owns the company, and the company gets to keep the proceeds, and they will use that money to fund a business expansion, open up new locations, maybe start a new product line. But the company only makes money when their shares are initially sold in that initial public offering. Then after, their shares are traded on what is called the secondary market. When trading happens on the secondary market, money no longer goes to the company when a stock is sold, it goes to the previous owner. To understand this a little bit better, pretend that I go to Rolex and buy a watch directly from them. They keep the money from that initial sale. But if over time I decide that I no longer want that Rolex, I sell it to someone else, I keep the money from that second sale. And the person that bought it from me, maybe they go off and sell it to a pawn shop, and then they would keep the proceeds from that sale. So companies only make money in the initial public offering, then the stock trades on the secondary market. Now, you may be asking, if I buy a stock of a company and become part owner, why would I want to relinquish my stock? Why would I want to give up my ownership rights? Well, people sell stock for a variety of reasons. For me personally, I only sell stock when I find a fundamental flaw in the business that I owned. Maybe they are starting a new product line and I don't think that it's going to be very successful. Or maybe they are trying to acquire another company and I don't agree. I don't think they should be buying that company. I disagree with management. If I find a fundamental flaw in the company, I no longer want to be an owner because I don't think they've got a good financial future. So I will sell my stock to someone else who has a different opinion. Maybe they like a new product line that a business has started, or maybe they're excited about a potential merger or acquisition. So I will sell them my stock. I will give up my ownership rights to them, and I keep the proceeds from that sale. That is what the stock market is. It's a place where people go to exchange stock. And most shares are trading on the secondary market. The stocks that are trading right now, today, have literally changed hands probably thousands of times because the stock market is really, really active. We're talking about billions of shares being bought and sold every single day. So it's a very, very busy place, a very, very busy thing. Hopefully that answers some questions that you've had about what the stock market is, or maybe it's raised some questions that you didn't know that you have. If that's the case, feel free to private message me, comment below, and we can talk more about this very important thing, the stock market. More videos will be forthcoming to help you understand investing. My name is Court Mackey. I'm a financial coach. It is my goal to help you get to the point where you have the money that you need to live the lifestyle that you want. Get in touch with me and we can talk about how that's possible. We can put together goals and plans for you to achieve financial freedom. Have a great day.